So yesterday and this morning we've had some mega moves in a couple of stocks. So there's the 4 stocks we're going to talk about in today's video, and then we'll also speak about the Fed a little bit towards the end of the video anyway. So I'm going to keep this nice and brief on a couple of these companies. The reason why is because on the Patreon I'll be doing a full review of earnings this weekend, so that's where I'll go into a little bit more detail. But I wanted to just cover the basics for you guys and my thoughts on them, and then for you guys on the earnings we'll do all of them, because there's been a couple this week where a certain company's reported and I've not spoke about them even though I own them, because we just don't have the time, and we could cover it all on the earnings video on the Patreon when we do get to them sort of stocks. But few ones that I do want to talk about, because I know there'll be a lot of questions on these ones in particular. So start off with Meta. Meta brought their earnings out pre-market. It's nearly up 8%. Now we touched on this on yesterday's video. I was like, I don't know if I can hit the numbers. You know, I think, like, I actually showed you the numbers and I said that they've been changing them quite a bit. And same again, I looked at the forecast that Yahoo Finance were giving, and I think it was incorrect that I showed you yesterday. I think they keep changing it rapidly. But either way, if you look at both sets of forecasts that were given there, Meta blew them out the water. And I've got to say, I was really impressed with these numbers. I was wrong about this company for this earnings. I was looking at the numbers, I thinking, are we going to see that much of recovery in Meta? And we saw the recovery in Meta. They absolutely smashed it. EPS was a really good beat. Revenue growth of 11% year over year. Really good growth coming back at the moment. And obviously you start thinking about, the environment we're in with advertising, but clearly their Mattel changes have all, passed now. The Reels are starting to bring in the benefits now. Really, really good from Meta. And you start looking at Meta now. I was in the camp of like, do I trim some? What do I do with Meta? And then I started looking now at what potentially profitability they start doing on a forward basis. And you look at the growth that they're going to do forward, you go, it's actually not, if they're doing these sort of numbers, it's actually not terribly valued. And that's sometimes where you've got to be really careful, is that you don't just sell a stock because it's gone up. And I was looking at that stock going, oh, it's gone up, and is it now too richly valued? And you're looking at it like, I think at the time it's like 40, 50 times earnings. But then you're starting to look at the numbers that they're going to do going forward now, with the growth they're going to have, the profitability coming back, and you start going, it's not actually that terribly valued. So I considered selling Meta quite a few times, and I thought, you know what, if they do hit these numbers, it's not actually that bad. And obviously that's the case right now. So obviously, another really good day for Meta, and we should see the stock now open at 52-week highs once again, on the way now, I guess, onto $400, which is absolutely crazy. So Meta earnings, didn't expect that. Really, really good earnings from Meta. Africa. So Africa brought their earnings out. The stock is currently up 3% today. This breaks the trend, because I said to you guys, and it's a running joke that we have on the Discord, like, Africa always drops off earnings. Not today. And this is why, it's a really risky game. If you start playing those earnings or day trading, like, it's a risky game, and that's why I just focus on the long term. Honestly, so much easier, stress free. Well, I say stress free, not if you include 2022. That wasn't a stress free year. But obviously jump up in today's earnings, and the earnings were actually really good. If you actually look into the numbers, there wasn't really too many negatives that I could see. Well, there was the one negative, which we'll point out, but total customers were up, mobile money continued at a rapid rate, the data carried on going at really good rates, money transaction value was up 47%, revenue growth 20%, even with constant currencies, was up 9.6% as well. EBITDA was up 22.5%, but obviously the big thing that we always talked about with Airtel Africa, and that was the hit on the bottom line, is the profit after tax was negative. That was driven by large foreign exchange losses. That is what we were speaking about, and that's what happened. So, we talked about, FX impacts a lot. Like, they are not always going to be around forever, and at some point it'll level out. But obviously that was the only big thing that hit the bottom line. But you take that out, and hopefully that stabilizes. When you look at the amounts of EBITDA that they're starting to put in now, it's nearly 50% EBITDA margin. As soon as this issue is sorted out, this company looks really, really exciting, obviously. So it was. Apart from obviously something that's out of Airtel Africa's hands, which is the FX impact, they were very, very good earnings again. So hopefully, with what I always say about Airtel Africa is, I'm not going to base my investing principle off an FX rate. I'm going to base it on what the company produces longer term, and I don't think that impact will be around forever. And if they carry on doing these results and that FX impact goes, So it was good to see that the people looked past the FX impact today and went, they're good earnings them. So that was obviously a great thing to see. National Express, or I should probably say, the new name change, Mobico Group. What? I still can't go over that name change. What a terrible name change that was. The stock is down 6% today. It actually opened up around about 10% down on the day, and it was having a bit of a dive off their trading update. Now, once again, I looked at this half-year report that came out. I thought it was pretty decent. Like, when you consider as well the fact that we're at basically, nearly COVID lows, 52 close, and I was looking at these numbers, I was like, this is actually not a bad report at all. Adjusted operated was affected by 60 million reduction CV19 funding and inflationary costs before the delivery of cost recovery and pricing action in H2. So basically, there was the 60 million they got last year that wasn't there. That's obviously quite a decent amount, you'd say. And obviously the inflationary pressures started kicking in for National Express. So they've kind of done a few cost-cutting actions. They're also putting the prices up. So we didn't get the full extent of that in this half-year report, but we'll get it in the next one. And that's why they said that on financial year 23, operating profit is expected to be between 200 million to 215 million. Now, that's actually, when you start looking at, we look at the market cap, you're a 615 million market cap company. So you're telling me we're going to be around somewhere times 3 times operating profit here? That's a bit crazy, that. 3 times operating profit. Like, surely not, but that's where we're at the moment. I was like, most stocks and most of the stock market is future thinking. So if you're thinking them, inflationary pressures and the cost actions are going to start coming in by the back end of the year, and you're going to end up with, 200 million in operating profit by the end of the year, you're three times nearly operating profit there. Like, surely that's way too low. And by the way, you're also picking up with 5% dividend yield. I was like, surely the market should be factoring that in. That's really, really good. So I was surprised. I was surprised to see that. Group revenue was up 15%, 18.5% on profit. So obviously there's no issue with the growth here. There's not a company struggling here. It's a company that's trying to manage its margins at the moment, and that's clear when it hopefully manages its margins back in the second part of the year. Obviously, then as long as it keeps growing and it sorts out the profit issue, this is unbelievable. Obviously EBITDA was down with the inflationary pressures, but then hopefully we see that obviously rebound to the back end of the year, which is absolutely fine. Obviously the dividend came back. There obviously was the group loss during this period of time. Obviously, granted, if you take out the one-time payment, obviously the company is in a better place on the profit before tax point of view. So obviously that's fine. Free cash flow went up. We're talking about nearly 80 million now in free cash flow. I mean, even if we say it just keeps it the same for the second half of the year, let's say they do 160 million in free cash flow, which it probably will be higher than where it is right now. Same again, it looks very low from that point of view as well. They paid down the debt, so they've gone, you see here, net debt was 946 million, which has always been one of the issues. That's now dropped down to 908 million. So you can see here that was from 3.1 times to 2.8 times. Same again, I'm looking at this here, I'm thinking, without the one-time payment, the profit before tax is up, free cash flow is up, the longer-term operating profit is going to be like 200 million, 3 times the market cap at the moment. Revenue was very strong growth, paying the debt down, dividends, paying a 5% dividend yield. I was looking at these results going, these are decent-ish results from National Express. Granted, you're going to have to wait, another 6 months for some of these, the new increase in price and cost coming in. But I was like, 52 close, 10% drop today on these numbers. I was shocked by the move in the market, this move in the market today. You see adjusted operating profit down H1 22 as a result of reduction in CV funding. Excluding this, the group operating profit has increased by 27 million. Annualised cost saving of 30 million, higher than previously announced, with 15 million saved in H2 23. So obviously that's going to help in when we get to the next one. As we talked about, full year adjusted operating profit expected to be around 200 to 250 million. If you start adding a few costs on there, you're going to be talking decent amounts of potential profitability you start hitting going forward as well. Yeah, I was really surprised by that. So yeah, I think this drop is not justified today. I expected the stock to be up on these results. The next one was Mattel. So I talked about this one as one that I was kind of watching, and I was obviously with the Barbie film launch, I was going to see. Obviously, it's a really tricky one because obviously this is for the second quarter, and they've only had like a week of the Barbie film being out, so it'd be quite limited the data they're probably getting and the demand they're kind of getting. But I looked at this one going, are you going to be hinting to the market like the demand has been absolutely insane since the the Barbie films will come out, are you going to start dropping things in like, oh, we've currently had over 100 licensing agreements contact us already, or we've already seen a backlog for this Barbie toy collection, is currently sold out now after a week, or some sort of data they're going to give us after the week about either licensing or product agreements that have increased or traffic that's increased since that time frame. I thought they were going to drop us some gems here about like you've just had the biggest event in your company's history, and what will help generate sales massively, and literally there was nothing. And I was looking at Mattel like, whoever is in charge of, well, obviously looking at probably the CEO, but I was looking at, you've just had the biggest event in your company's history and you are not playing on that at all to investors. You're not giving any information to investors. I was like, that's terrible. Like, that's terrible. And I looked at the stock, and even after the pre-market, the stock's down 1%. How is your stock down 1% in pre-market after you've had probably the biggest event your company will ever have? This earnings report should be massively playing on that and giving investors details about orders and orders. I mean, there might be no orders coming in, and that's why they've not talked about it and why the stock's down. But you would think after that event, like, the stock would be doing so much better than what it is at the moment. And that was shock for me. So that was really disappointing to see from Mattel, because I was looking forward to seeing if they were going to give any little bits of little Easter eggs in their earnings report. And that didn't really happen at all. So, not good from their point of view. The last one, the Fed. Obviously, we've been talking about it this week, and I stuck at the back end of the video because it's normally as the video goes on, the views drop off as the video kind of goes on. So I thought, the bit that people would be least interested in, and that's what I was as well last night. I was listening. I didn't even listen to it. This is the first time for a long time I've not listened to Jerome Powell speak. And the reason why is because I knew exactly what I was going to do. I said it in yesterday's video. I said he's going to do exactly this. He's going to, not play it down that much. He'll give himself a bit of room. If he needs to increase interest rates, he'll, give him space if he needs to increase it. He's not going to come out and say we're not putting up interest rates anymore. He's not going to do it. He's just always going to give him the room for more interest rate hikes. And obviously, as predicted, he once again put up 25 basis points. And I mean, it's crazy. It's absolutely crazy that we went up 25 basis points, and there was still talk once again about going up again on interest rate hikes. And it's like, what data is he using out there? Like, you look at true inflation, 2%. You look at inflation rate, 2% right now. The only thing that is up is core. And then when you look at core, like, obviously that's got so many lagging indicators in. Like, why are we using lagging indicators for where we should be putting our interest rates up? It's absolutely bonkers, So, yeah, as I said before, like, I am very bullish on the stock market. I'm very bullish on the US economy. He is the one biggest threat I see to the stock market right now. If he carries on putting interest rates up, how he's putting interest rates up, unfortunately, that is the biggest concern out there, because all that's going to do is slow it. It doesn't take impact directly. These interest rates that are going up right now won't come into the system for quite a while, and all that's doing is once again, the market cannot adjust to what the interest rate is, and because of that, it's just putting more and more pressure on the economy and consumers right now. So, yeah, obviously there's not much I can say there, because what I said would happen has happened, and my thoughts are exactly the same as where it was a week ago, a month ago, even probably 3 months ago. So yeah, that's that anyway. So 4 companies that reported earnings there, and my initial reaction, guys. And like I said, I'll probably go into them in a little bit more detail on the earnings review on the Patreon. Anyway, guys, thanks for watching. Catch you in a bit.